Futures and options on futures trading involve substantial risk and is not a suitable investment for all types of investors. Past results are not necessarily indicative of future results. When I use the word I in this video, it refers to what I teach in my charting course or what I author in my twice daily oral and written updates. Prices shown on charts and quote boards are in real time and take into account all known activity up to this point in time. And if you'd like to read more of this disclaimer, simply hit the pause key on your video player. Good weekend. Ira Epstein of Linn Associates with your agriculture update for this Friday, the 21st of September, 2018. Now, in the weekly updates, I handle the markets a little different. I'll first look at one monthly chart, then I'm going to go in the weekly charts for all the agriculture products. The reason is I'm doing the daily charts 4 days from Monday through Thursday, but sometimes it's awful smart to take a look at what a weekly chart is. I look at them often, but trading off a weekly chart, no, I don't do that. I'm talking in terms of my analysis for my subscribers. My research. What I do is I use it to see, is the market into support, resistance. Maybe you just had a sharp move in the market, but the weekly chart just says, hey, the bigger picture didn't change. So I look at that all the time. When we look at the soybean market, yeah, the market's gone down to 810.5. This week you got as low as 811.5, and you got a bounce closing up 14.25. Now, is this the low? You know, I keep hearing that from traders. Oh, maybe it double bottomed and made a low. Okay, but do we have the harvest pressure on the market? Not really. I don't know anyone that's doing their harvest now of soybeans, other than maybe they did whatever they could, from Hurricane Florence. But barring that, no. So it's a bounce that the market might try, but I don't know where it's going. When I look at the action like this, what I like to do on a weekly chart is first put my swing line study. And the swing line study starts opening your eyes up a little different to the chart action. I'd look at that pattern and have one idea, but when I put on the swing line, it's pretty clear. I have a pattern of a lower low and a higher high. I'm out of a downtrend. You don't see that really on this type of chart, in my opinion. When you look at moving averages, the resistance is about 40 cents higher right now in the 882.5 area, and the 18-week is under the 100-week. So you have a bearish configuration in the market. You had a bearish crossover right back here, by the way. If you take a look, this is what a crossover looks like. Notice how the 18 was over the 100, then it crossed over, and it generally puts pressure on prices, and that's what basically happened. Now that that's out of the way, now I look to see what next. When I look at the weekly Bollinger Bands, the last time the market hit the Bollinger Bands was back here in July. It hasn't been near them in a long time. Bollinger Bands offer support on the downside, resistance on the upside. The market will trade 95% of the time within the bands. And the one thing that you should pay attention to is you are not, I want to use that word not, we are not trading sideways. We've been in a downtrend. The pattern's a bit different. When we come over to the slow stochastics, which is a momentum index, it is trying to turn up. If you'll notice, one of the numbers is now back over 20. So we have a market that's been going basically sideways for a bit here. You did not narrow the Bollinger Bands in. The bias is down. The divergence is that momentum is pointing up, and you're out of a trend on the swing line. So maybe just a correction taking place. The meal market, on the other hand, is still in its bear trend. It still has lower highs, lower lows. Now, the big question in meal, are we going to get a bearish crossover next week? I'll be looking at that very hard, because if you do, then the question is, does that mean that these lows can be challenged again as a chart technician? Soybean oil still bearish. Now, you had a nice rally today if you looked on the intraday chart. On the daily chart, you lost what I call an embedded reading. And when you lose that, markets often make a run back to their 18-day moving average of closes. I don't use embedded readings the way on a weekly chart that I do on a daily chart. I just look at what the momentum's done, and it's turned up. If it wants to make a run, could it be going at 28.83? It could. This might also imply that oil wants to be stronger than soybean meal. In the corn market, this is what I call a pretty ugly chart. And why do I say that? If we come back last week you had an outside week down. You had a high of 357 and low of 336. You took last week's high out. When you take out the high of an outside week down, the week after, or the week after that. It's within 2 periods. I often look for prices to make a run for the red line, the 18-day average, or the closest of the major averages could be the 100. In this case, it would be the red. It's underneath that. So it's 360 and a fraction. That's all that I'm looking for in the market before resistance comes in. In the wheat market, this market has turned the corner on the weekly charts. You now have a pattern of higher lows. You've had the higher highs. You closed over the 18-week, and momentum looks like it's trying to make a turn to the upside. In the cocoa chart, it's bearish. We had a nice extended rally in the market up to the 18-week average, failed there, and now you've been making new lows, breaking back. What number's the green? That's the 100-week average of closes. The red's the 18. So the market went to that. If that gives ground and momentum stays as it is, pointing down, you might be making a run back to 2019. Let's assume the market reverses up from here. To break the trend, 2376 is the number that I think the pros will look at and then say, okay, we had that break back, we got over that number, chart's going to rebuild itself. In the sugar market, we've had a bear market rally. I say bear market because the market had been trading under the 18-week average. It was running against the lower Bollinger Band. It lost downside momentum right here when it popped up. That carried the market back to the 18-week average, where the market is now fighting a battle to see what next. In the coffee market, you'll see that you have lower highs, lower lows. What do you see in price? It has been running the lower Bollinger Band. Now, if this red line pops over 20 with this extension up this week, it might be a sign that coffee's found or finding a bottom in place, something to be looking at for yourself. In the cotton market, momentum down, bias down, prices under the current lows, 77.97 target for the lower Bollinger Band if it wants to go there, 78.24 this week. Yeah, it bounced away, but I still don't see the market as being in an uptrend in any manner. I see the market as a market that just threw in the towel. And there was a lot of ideas, you know, all these storms are getting from the hurricanes and so on. What would it do? Didn't do any damage. Cattle on feed report came out today. I looked at the numbers. I think they have a slightly bearish tone. Wouldn't be surprised if you get a reaction like that. You're up at the upper Bollinger Bands. The trend has been up. Higher lows, higher highs. Will the report do a lot of change? I don't think it's that big of a report. However, I didn't see anything friendly in the report. Doesn't mean anything in cattle. Let me tell you, cattle market seems to be run by the high-frequency boys, and it just moves. As a chartist, though, I say you're into a resistance between the upper Bollinger Band and the 100. I see nothing bearish yet on this chart. In the hog market, I see a market that after this plunge, with this week's rally, ended that break. You had a break, you had a bounce, fell back to new lows, and the week now took out that high. Also, momentum back over 20. I can make an argument that if the market wants to see more buying, short covering, whatever it is, resistance is waiting for it. 67.37 to 67.42.5, the 18 and the 100-day average of closes. So you put it together and you try to come up with gains. And for those of you that watch the golden markets like that, I wrote a really detailed report this month for it. I wrote the report earlier in the week. It went out to everybody, but if you're not on our mailing list, you didn't get it. To get it, you can call my staff. You can go to our website. If you go to the website, you'll see a carousel of free offers. Simply click on any. You'll be able to choose from the many, and the gold report will be there. Same thing here. If you see this icon on YouTube, just click it. It'll take you right to that page. I'm Ira Epstein. You have yourselves a great weekend, and I'll see you all Monday.